Are you ready to grow your financial practice to heights you've never imagined? You're listening to the Elevated Advisor Podcast with your online business mentor and host, David Scranton. Each week, you'll learn Dave's secrets that have helped him become one of the most successful financial advisors in the country. So are you ready to become an elevated advisor? The Elevated Advisor Podcast starts now.
You ever wonder if you should integrate life insurance into your practice? Well, if you have, today's guest is going to tell you how you could build a lot of assets under management, but by building around a life insurance base within your practice. I'm David Scranton. This is the Elevated Advisor Podcast. And today we're here with my good friend, Tim Yurek from Tier 1 Capital, right in my namesake, Scranton, Wilkes-Barre area, huh?
Yes, sir. Yeah.
Yeah. Well, good. I'm glad you're here. I know you came in today to do some other stuff, but I'm glad you're spending some time here for the podcast, and that's great. How many years have you been in the business?
Actually, yesterday was the end of my 40th year in the business.
End of your 40th anniversary, going into 41, right? So basically, as soon as my family founded Scranton, Pennsylvania, that's when you established your practice. Is that what I'm hearing?
Well, it was a little after that, but not much.
40 years, well, good for you. And you started on the life insurance side or the security side?
I started on life insurance, morphed into a full service, financial services,
okay.
And then somewhere along the line realized that my passion was working with business owners and helping them solve business succession, exit planning, key person retention planning, stuff like that. And once I started doing that, I just got reinvigorated, if you will, in the business.
See, so you might be thinking, okay, life insurance, right? So he's going to be across the kitchen table in the evening with mom and pop and trying to do a needs analysis of how much life insurance they need if mom or dad go and to put the kids through college and pay off the mortgage. But it's really none of that. It's none of that. Whereas, if I were to try to come in with a business owner as, an AUM guy, it would be a little more challenging. I'd have to come in and try to convince them, everybody's vying for their AUM, right? Because there's brokers out there that are trying to go after the bigger accounts. And I'm going to try to get it, and I may get a little piece. He may try me, but that's about it. You're coming in from a whole different angle with strategic business planning for that particular business owner. So highlight, if you will, just a couple of the simple strategies that you might use here to get that business owner's attention in a way that maybe somebody like myself wouldn't.
Well, so we do education-based marketing. And one of the biggest challenges, so we hired a research company, and they came back with 42 pages of raw data. And some of their findings were that 61% of small business owners struggle with cash flow. And 69% of small business owners either lose sleep or sleep less due to cash flow concerns. Now, there have been multiple studies connecting sleep deprivation to stress, and stress increases our risk of heart attack by 200%, cancer by 40%. So here's what I found, though, is working with business owners for the past 40 years, Dave, all of these cash flow issues are self-inflicted. And here's why. We have been trained to use our money in a way that is detrimental to us and beneficial to the large corporations, our vendors that we're dealing with, the financial institutions that we deal with, as well as the government.
Yeah.
And because of that, we find ourselves cash strapped. And I could underscore where this was really a big issue for me, because our industry, if you're trained by the financial services industry, when they train us to go and speak with business owners, they teach us on how to uncover problems. And then they teach us on how to put a price tag on solving that problem. So I come back, I walk into a business owner's office, I explain to him that he needs an exit strategy, or he and his partners need a business succession plan. They're like, yeah, geez, That would be a great thing.
But then what's the price tag on it? And it hurts their cash flow. It doesn't help it.
Then exactly. And you come in with the price tag the next week and there's like, hey, Tim, I would love to solve this problem, but if I had an extra $1,000 a month, I'd be doing something with it. I don't have that type of money.
Mm-hmm.
So again, underscoring the research,
Mm-hmm.
61% of small business owners struggle with cash flow. So then what I found was it's not the amount of money they're making that is holding them back. It's literally how they're using their money. We call
Mm-hmm.
that the financial golf swing.
Mm-hmm.
So think about it. Our industry, other industries are selling products. They're the equivalent of the golf club, but nobody's teaching those clients
How to swing that club.
how to use those tools or swing
Mm-hmm.
that club. And that's what we do. We teach them a better way or a different way to utilize their money. And once they understand that and they utilize it, now all of a sudden they're finding the money that's already baked into their cash flow
Mm-hmm.
to solve the problem. But on top of that, solving the problem is not good enough in my eyes. It's something that may or may not happen. My partner may or may not die before we retire, or my exit is 25 years from today. But then what we do is we show them how to actually access the monies that we're putting away so they can run and grow their business. Now we're getting $1 to do 2 or 3 or different jobs.
So what you're doing is essentially what our fractional reserve system does in the banking industry. It's what the Federal Reserve does when they talk about the flow of money throughout the economy. Again, banks look at it this way. And so it sounds like what you're doing is you're taking something called BOLI, right? Bank-owned life insurance, essentially, and where banks actually own cash value life insurance and they use it as an asset and they use it as an investment and they do other stuff. But they're teaching your average business owner how to do what the Federal Reserve does, how to do what banks do.
Exactly. And on the business side, it's corporate-owned life insurance,
Right.
or called COLI.
Mm-hmm.
So we're teaching them, we're showing them not only how to obtain it with money that's already in their cash flow, but now we're showing them how to utilize it to run and grow their business. And that's a twofer as far as we're concerned.
Now, you look for certain types of businesses or certain stages of growth with the business or ages of business owners. Talk to me about the profile here that best fits for this type of strategy.
That's a great question, Dave. So our ideal client would be somebody in their early to mid 40s that has been through the system,
Okay.
been beaten up and scarred a little bit, and understands that the system doesn't work for them.
Yeah, they maxed out lines of credit. They paid them down. They know what it feels like to have that hinder your growth.
Exactly. Could I share a case study?
Please, yes, that'd be great.
So I met with
I'm sure after 40 years you have several of these.
Well, I met with this guy about 2019, and on paper, he was really good. He had over $1 million in his retirement account. He owned 3 buildings that he had locations of his business in. He owned his house, and he also, his business, the valuation or the equity in his business was a little more than $1.5 million. So his total net worth on paper was just shy of $5 million.
Mm-hmm.
But after speaking with him, asking him some questions, he was literally borrowing money on credit lines to pay his quarterly taxes.
Mm.
And so my question to him was, how much income do you make? And at the time, it was $650,000. So again, he was in his early 40s. So I said, well, how much were you hoping to make in college? And he just sort of chuckled and said, well, about 150, 200,000. And I burst out laughing, more for effect than anything. He
Right.
goes, well, what's so funny? I said, isn't it ironic that you're making 3 to 4 times what you ever dreamed you could make in college, and you can't pay your friggin' taxes without taking a draw on your credit line. Now, at the time, he had 2 business loans that were credit lines that were termed out and an open line of credit. So he said, well, that's just the way I do it. And my response was, does that make it right? He said, the banks must really love you, because on paper you could pay for everything. But why can't you pay your taxes without a draw on your credit line? He said, well, what would you do? And my response was, if I can show you a way that you would never have to pay your taxes with a draw on a credit line ever again, would that conversation be worth 45 minutes? And he agreed. We met, and this is the summer of 2019.
Right.
We finally put a plan together where we found $5,000 a month already in his cash flow. And we funded an exit plan for him. But more importantly, the goal was to be able to show him how to use that money to pay his taxes. I got a text message from him on July 8th of 2020. He said, hey, I just want you to know I left my CPA's office. We filed our 2019 taxes on extension. I had enough money set aside to pay our 2019 tax liability, but better yet, I also have money set aside for our September quarterly, our January quarterly, and for what we believe we're going to owe in April for our 2020 tax liability. Thanks for all you do for me and my family. Now, Dave, right there, that's a pretty good story.
Yeah.
Think about it. We started a plan in October. 9 months later, he doesn't have to borrow on his credit line.
Sure, all that stress you talked about starts to just melt away when you're not worried about the next quarterly payment.
Exactly. Well, let's fast forward to December of 2022. Now, one of the things I didn't share with you earlier was the fact that when I called this gentleman, he said, I don't know if you could help me because I have 2 financial advisors and I meet with my CPA every month. If there was anything I needed to know, these folks would have told me about it. And so, again, he agreed to meet with me because of the strength of the referral that I had into him. So now, December of 2022, we're meeting at my office at 7 o'clock in the morning on a Friday in December, me, him, and his CPA. So he now grew his business from 3 locations to 7, all of which was capital intensive. He and his wife purchased a house at the beach, which cost more than $1.5 million. Again, capital intensive. He owned the real estate on those 4 new locations, capital intensive. And each business had its own checking account, plus the accounts he had built with us. He's now sitting on $1.8 million of cash on hand. And so you see, we flipped a switch and showed him how to be in control of his cash flow and his money. Think about it. He had $5 million of net worth. Business equity, he needed permission to get it through the banks. Real estate equity, he needed permission to access it through the banks. Retirement assets, he couldn't because he had to pay a tax and a penalty. So on paper, he's rich, but the reality is he's living pay to pay.
And what you did with him, and the business model I know was built to some degree around cash value life insurance and structuring it as an investment for them. And the beauty about it is that it helps him fund his long-term goals. It's kind of like what the Wall Street Journal coined a phrase back in the 90s they called overfunded life insurance. They called it the rich man's Roth, because you're not limited to how much money you could put in. And the analogy I make is kind of like martial arts. If a instructor were to try to teach you how to break a board with your hand, they would tell you to aim at a focal point beyond the board. Don't aim at the board, you might break your hand, right? So you want to break the board, you aim at a focal point beyond the board, so you accelerate through the board.
Correct.
And that's the metaphor I think of, because what you're doing is you're getting people to put money away for retirement, but unlike their 401k or their pension or IRA, this is money that can be used early to finance other business endeavors, to finance a second home you talked about, and things like that.
Right. And, the interesting thing was a lot of the stress in his life was he and his wife were constantly bickering about money.
Mm-hmm.
And think about it, they're making $650,000. It's a lot of money.
Yep.
So the point was, since we started working together, they have not had any discussions about cash flow. They've not, and a lot of it was coming from him. You know, he'd walk home, he'd walk in the house, and you know, the kid's got a new this or a new that, and it's like, what did that cost me?
Right.
Well, now those conversations are over
Gone.
because we've shown him how to access his money literally on demand.
Yeah, I love it. You know, I'm familiar with this program. For those of you who know my background, I started in the life insurance side, and I learned about a concept called infinite banking and how to use an overfunded life policy to finance things like that. I use it in my personal life. But what I found when I was trying to talk to people about that, you know, average folks that work at a company, maybe they're even highly paid executives, is they didn't think like business owners. They didn't really understand it. So I was trying to get them. I'll never forget the time I lost this potential doctor as a client. I think his name was John. And it made all the sense on paper. And he said, this makes so much sense on paper. But he said, you know what? He goes, I guess when it comes right down to it, I'm too much of an in-the-box guy to utilize this strategy.
Yeah.
And I started thinking about it, and I said, well, great, as a business owner, it made sense for me thinking out of the box, but not for your physician or not for your average manager or employee somewhere.
Right.
You're doing with business owners that are already think outside the box. They're already visionaries, they're already more autonomous. I think it's a much better message. The message relates with them much better than it did for my audience when I was trying to do this 30 years ago.
Yeah, and you know, so one of the things that we always discuss with our clients or our prospects is basically to say, hey, listen, over the next 10 years, you're going to have 2 emergencies and 2 opportunities that come past you.
Mm-hmm.
My job is to position you so that the emergencies don't break you and you could take advantage of those opportunities. Yeah. Because what is, in my eyes, the greatest frustrations in life are having opportunities that you can't take advantage of.
Right. Somebody else takes it, they run with it, and they become a billionaire. And you think, I had that idea before he did. Well, but you didn't have the capital.
That's a great point, Dave, because one of the things we always say to folks is opportunities are never lost. They're just taken by somebody else.
Mm-hmm. Yep, 100%. So now I know, so a lot of our people here, some people here listening are come from a life insurance background, and they might be getting excited thinking this is a new angle. Gosh, as opposed to going to fund to buy, sell, and soak up cash. Maybe I can help them with cash flow. But there's also a lot of AUM type people here. And I know what they're thinking. They're thinking, well, but once I do this, this is great. I come in planning. I'm adding a lot of value. I love it. But ultimately, the product that ultimately helps them here, outside of the planning, the product itself is cash value life insurance. So aren't they going to look at me as the life insurance guy and I'll never get their investment management money?
Well, let's talk, let's talk about that gentleman that I mentioned earlier, right? On paper, $5 million. Well, I got his company's 401k, so I got his $1 million,
mm-hmm.
right? That we're managing. He's doing so much more. He literally just sold his business for $24 million. We're going to get that.
Mm-hmm.
And, that was an ancillary part. Remember, he had 2 financial advisors, but in December of 2022, he and his CPA are meeting at my office. Well, guess what happened to those other 2 guys? So the point is, we're not passing over AUM.
Mm-hmm.
It's part of what the package is.
You're just not leading with it.
Exactly. We're leading with the golf swing. We're showing them how to
mm-hmm.
use their money in a more effective way. And here's the point. That guy, $1.8 million, the moral of the story, Dave, is that he always had the potential to be in that situation. He was just trained to use his money in a way that was detrimental to him, his family, and his business.
Yeah. And there's a lot of training that is really geared toward the average employee. And that's, in fact, most of the training, if you read the financial magazines or you listen to financial advisors, it's about maxing out your 401k, maxing out a 529 plan. And those are all good tools, but they put your money in jail.
Exactly.
And if you're a business owner, that's a problem, because now you get that business opportunity. You want to be a capitalist, and you can't because your money's in jail, right? Or like you said, you have an emergency, you have something that happens in business. Now your guys seem to do well through the pandemic, and that was great. But for a lot of businesses, the pandemic was one of those emergencies where it's like, I wish my money weren't in jail, or they start pulling it out, paying the taxes, paying the 10% penalty. Next thing you know, they're getting 50 cents on a dollar just because there was a pandemic that they hadn't adequately planned for.
Exactly. And again, there are those emergencies. We don't know when the next pandemic is. We don't know what the next shoe that's going to drop is going to happen. But you have to position yourself so that you could take advantage of it, and more so weather those storms.
Well, you are preaching to the choir, especially with one thing here, and that is based upon my book, which you're aware of, for financial advisors, Attract and Grow. And attracting and growing starts with differentiating yourself from your competitors. And Tim, it's obvious that you've done an incredible job with that, and I think that's a big key to your success. You're coming in the door a different way with a different look. You're not looking like every other. Now I'm going to date myself because we're both a couple of old dudes, right? As my mother would say, you're not looking like every Tom, Dick, and Harry coming through the door, right? So with that, would you mind if some listeners here were to reach out to you and just saying how they might be able to reach you, if you wanted to share a little bit about what, how this business model might look for them?
Yeah, sure. So you could reach me at Tim Yurek. That's TIMYUREK at Tier 1 Capital, TIER, the digit 1, CAPITAL.com. Or, I'm an old guy like you, so, we use the phone. So if you want to call me, you could call me at 570-814-5178.
Yeah, we were growing up. If you want to go on a date, you actually had to call a girl on the telephone, right? You can't just message them on social media. You actually had to do the hard work, and oh no, I might get rejected. Well, and maybe that's why a lot of financial advisors today are our age, because we grew up getting rejected every time we did ask a girl to go on a date, right? So it was a little tougher, and the rejection just carries over in business. But it sounds like you found a way to eliminate a lot of that rejection through that differentiation.
Yeah, exactly. And the thing is, I love working with business owners. Mm-hmm. Like I've always had an entrepreneurial spirit growing up, but working with business owners, they are the backbone of the U.S. economy. Again, part of our research, 44% of our gross domestic product is money that comes from small business owners. 50% of all jobs and 90% of all companies in America are small business owners. It is a market worth serving.
It is. I love it. I love what you do. Tim, thanks for taking the time here. And again, if you want to reach Tim Yurek, it's Tim Yurek, TIMYUREK at Tier 1. That's TIER, the numeral 1, tier1capital.com. Tim Yurek at tier1capital.com, or the old-fashioned way, right here. So, all right. Well, thanks for spending some time with us today. I'm David Scranton, and you've been listening to the Elevated Advisor Podcast.
You have been listening to the Elevated Advisor Podcast. If you enjoyed this episode, please subscribe and share it with your colleagues. If you would like to talk about elevating your financial firm, reach out to us at theelevatedadvisorpodcast.com. Investment advisory services offered through Sound Income Strategies, LLC, an SEC-registered investment advisory firm. Sound Income Strategies, LLC, and the Retirement Income Source, LLC, are associated entities.